Welcome to Hot Topics on the Edge of Show. I'm Richard Carthon, and I'm here with my co-host Josh Kriger, as well as Christian Davies from Relm. Thanks again for joining us, Christian.
Thanks for having me.
This is another production of the Edge of Company, a rapidly growing media ecosystem empowering the pioneers of Web3 technology, culture, and innovation. Today, we're talking about three major stories moving markets and reshaping trust in the space. From Bullish's BIT license breakthrough to Gemini's SEC settlement and Relm's powerful new product for exchange insurance.
This episode is brought to you by Relm. Relm crafts insurance solutions that give businesses in dynamic industries like Web3, AI, alternative medicine, biotech, space economy to protect and innovate and thrive. Where emergent industries have previously battled uncertainty, Relm is making innovation resilient. Also, a quick note, the views expressed by Edge of Company do not necessarily reflect those of Relm.
By the way, please stick around as we've got a quick but very important update at the end of the episode. In the meantime, let's jump right in. Richard?
All right, let's get it. So the very first conversation we're going to talk about is Bullish getting its BIT license, and is it a gateway into U.S. institutions? So it's rather reported that crypto exchange Bullish has secured a BIT license and money transmission license from the NYDFS to finally open the door to serve institutional clients in New York. So this caps a wild few months where Bullish raised 1.15 billion entirely in stablecoins during its IPO and received its MiCA license to uplift in Europe via BaFin. It is now operating across the US, EU, Hong Kong, and Gibraltar. Josh, this big move brings in institutional grade crypto services to the US with real regulatory backing. So, how significant do you think this is for Bullish and the broader market?
Well, this is fascinating. And I think I first want to point out that it sort of gives us a little bit more of a sense of the rationale behind the acquisition of CoinDesk, right? CoinDesk has a very strong US market, and it seems like they've been sort of gearing up for these types of moves. And maybe that was part of their overall calculus. With that said, getting the BIT license is a huge deal. It's very, very difficult, and it's a green light for institutions who have been waiting on the sidelines. Could mean a lot of exchanges sort of look at the US differently. Bullish now has a lot of momentum, not to mention the capital and the compliance stamp to make some big waves with traditional finance and DeFi worlds. The timing post IPO, post micro is no coincidence. They're playing the global game with real infrastructure. This is a formidable move. What are your thoughts, Christian?
Yeah, I think it's massive, right? New York is traditionally the hardest license to get out of the US. It's very slow, it's very big, it's very clunky, and actually, it's exactly the same in insurance. New York is also one of the most difficult states, even for like a regulated insurance entity. It's fascinating that a lot of other states actually base their licenses or make simplified versions of what New York does. So yeah, no, it's really, really big for them. It's just a further, I guess, feather in their cap, especially as most of the major financial institutions that they really want to be working with are based in New York as well.
Yeah, I think it's really awesome that this is happening. Like you said, things move at a very snail's pace as it relates to getting these things across the finish line. But now it's usually the hardest for the first to get it, but then after it's proven it's done, more and more are going to try to come out the gates towards this. So, Christian, just to pass up to you as a follow-on question, how do you think this is going to open up the floodgates for potential other companies to try and do something similar?
Interestingly, it's not people will obviously go through the process, but New York doesn't change their mind or doesn't make it easier for anyone else. But what people will have learned internally at Bullish of going through this process is, there could be some great people who have done this New York BIT license. Maybe we hire them out of Bullish and try and do it ourselves and learn from everything that might have gone wrong in their process. But yeah, it's never easy. You could do this 10, 20 times and they'll still find something wrong. But that's also just the way that the New York DFS works. They're incredibly regimented and incredibly strict. So yeah, this isn't going to make it easier for anyone else. But just now we've got this goal that everyone else wants to get to.
For sure. Oh, and that's helpful to know. Like it's always going to be a grind, but yeah, like you said, people are probably going to be trying to get some of the talent from Bullish to help them out as they try to climb this mountain to do something similar. But that kind of brings us into topic two. So we're going to talk about the SEC reaching a settlement with Gemini with their Earn program. So this one comes from being crypto, and it's been nearly 3 years of legal back and forth from the SEC and Gemini, and they finally reached a resolution in principle over the infamous Gemini Earn program, which left customers unable to withdraw funds back in January of 2023. This comes right from the heels of Gemini's $425 million IPO, which pushed its valuation to $3.3 billion. This is really interesting because I don't know if a lot of people know this, but Gemini at one point actually filed for bankruptcy and has come out and like gotten to this point. So just the resiliency to get here. So when we look at this, it looks like the current administration is scaling down federal crypto probes, and the Winklevoss trims have even lobbied against certain people to like help, get this to the finish line. So, Josh, just going to this whole resolution, what do you think this is a sign of? Do you think it's shifting more to crypto regulation being handled in the U.S., or do you think this is giving more power to companies that are overseas that might want to come and have the opportunity to do something similar to what Gemini just did?
Well, it's definitely more than just IPO housekeeping, Richard. It feels like it's part of a larger wave, a pivot, if you will, that's reshaping the enforcement landscape. The Gemini Earn fiasco was one of those early warning shots for crypto lending platforms, and now we're seeing the SEC wrap things up as the political climate is changing. With the administration pulling back on aggressive enforcement, these types of settlements seem less about punishment and more about checking boxes before moving on. I think Gemini timed this pretty well. They've got the new credit card. They're sort of which allows people to earn Bitcoin, which I think is a fantastic way to bring folks on. My cousin told me that she got the credit card because that was her way of getting into the space, and I think it's very not so intimidating for folks. And I think with this sort of new era, SEC softening its tone, it's going to be a little bit more progress on resolutions behind the scenes. And I think just more innovation, which is why I'm so excited about our event at Capitol Hill on October 30th. We've been talking about it a lot on the show, and you guys have seen the updates. But now the question is for our industry is what's next. Yeah, there's still some finer points around the market legislation that really has to be figured out, but fundamentally tides are shifting. It's a great time to explore what's possible in the United States again.
Yeah.
Christian?
And Christian, before I get to you, one quick update. I wanted to correct myself. So Gemini did not file bankruptcy. Genesis did, which was its partner company that basically had the funds where the Earn program was happening. So just wanted to make that one quick correction.
Yeah, always. I mean, if you want to know something really cool, in I can't remember if it's the end of 2012 or the very beginning of 2013, when I was an insurance broker, I actually had this account come across my desk. I can't remember the exact project's name, but it was two dudes who were part of Facebook were launching or wanting to launch this crypto exchange, and they were going for this trust license, and they wanted to be the most regulated thing in crypto in 2012, 2013. And it was a project name, so it was all incredibly secret at the time. And I was like, wow, I'm going to have to create an insurance product for this, and I'm going to have to try and get underwriters in the insurance market to actually want to insure this. Not going to lie, if Relm existed then, my life would have been way easier. But it was quite cool to see. But they always pitched themselves as being, incredibly compliant. They always went after all of the licenses. I don't want to misspeak in the fact that I thought they were one of the very first as well to get a New York license, and they went down that fully regulated custody route as well. So the Earn thing, I think that lots of people kind of fell foul with the whole FDIC insurance part of it, where ultimately funds that were behind in a bank were FDIC insured, as long as the banking partner that they were using actually had FDIC coverage. Yeah, it's what we're going to see throughout the SEC. But whilst the SEC is changing their view in terms of enforcement, and it's becoming more of a enabling jurisdiction, right? The US with crypto legislation. It's not to say that the SEC are turning a blind eye to crypto. They're not. They are absolutely still looking at enforcement, but they're now way more focused on what should be legitimate enforcement rather than this just witch hunt that we saw under previous ruling parties.
I think that's going to continue to evolve. It's clearly there's been a dynamic shift in the approach as it relates to crypto, and what's going to be targeted. And I think that as we look at where is focus going to be, it's going to be on the protection of a lot of people coming to these larger institutions and how they are going to go about protecting the downside of if things go bad again. 2023 was a really rough year in a lot of different ways, and I think the crypto industry has come out stronger for it. But one of the things that's necessary is having good regulations and things in place to protect that. And also, people and companies have gotten smarter with having things like insurance programs to help protect downside risk if things go wrong. Which kind of leads me to the third topic that we want to talk about today, which Relm is launching the Fault to Web3 insurance for crypto exchange defaults. So let's jump into that a little bit more. So it's a first of its kind insurance product designed to protect users against crypto exchange defaults, including bankruptcy, insolvency, liquidation, or even withdrawal halts. This comes at a time when trust in exchanges is shaky, with over 25 platforms collapsing in the last 5 years. So Fault to Web3 uses proprietary risk data and credit insights from Edgeo ratings, famously flagged FTX and other failing platforms. Also, Relm is using alternative reinsurance models and even offering self-insurance options through regulated sidecars. So Christian, with so many of these traditional tools failing to protect us and users in the past, how does Fault to Web3 change the game for crypto investors and institutions relying on exchanges today?
Absolutely. So, this all kind of obviously Mt. Gox disappeared, right? Lots of money went missing. We all know about FTX. We all know about Three Arrows. We all know about all of these other kind of entities that have kind of gone kapoof. Yeah, everyone thought they were incredibly solvent. So Fault to Web3 spawned out of seeing what everyone knows is counterparty risk, right? And you can only do so much due diligence on some of your counterparties to really understand what their balance sheets are, how they operate, what they work on, and that's what insurance is for. So Fault to Web3 was born out of the idea of why don't we look to provide an insurance cover that basically looks to indemnify or at least cover some of the loss to a party from the result of a exchange bankruptcy. So that's the way that it's geared up at the moment. And it's insolvency, it's bankruptcy, it's liquidation. And the actual trigger of it is if someone can't withdraw their assets for X period of time as a result of a bankruptcy or an insolvency event, that's the trigger. And we partnered with Edgeo Ratings. That's a company that does all this assessment, all with on-chain data to see inflows and outflows and what their assets are and how, and it creates a model that we then use to create our own underwriting model on the potential for said exchange to go bankrupt or said counterparty to go bankrupt. So it's fascinating, right? From an insurance perspective, when we provide insurance, we do up to about 5 million of US dollars or euros or GBP of insurance limit. You can imagine a lot of these people, they want 200 million, 300 million, 400 million of insurance, right, which not one single insurance company can offer. So we have a separate part of Relm called Relm 2, which is, as you can thank our marketing team for the incredibly imaginative name there, Relm and Relm 2, for an alternative risk transfer vehicle. Let me explain what alternative risk transfer is. Rather than just coming to us and say, I want to buy this Falter product, and I go, cool, I'll charge you $100,000 for 5 million a limit, and you pay that every year. What we can structure is you take your capital, you put it into this vehicle, and you essentially are insuring your own risk with our assistance. So you can build as big and you can put as much capital in as you want. The cool thing about that is if there are no losses, there are actually returns that you make on the underwriting profit. So you're not paying us the premium, you're paying yourself the premium. And then you can pay yourself dividends off that. So you're actually participating in the underwriting of that risk. So it's, these kind of structures and alternative risk models and investment vehicles have been around for 50 plus years. Pretty much every Fortune 250 company has one of these, because otherwise it would just be very simple dollar swapping. But it really allows people to build these massive limits and kind of put their money where their mouth is, where they do it from a risk management perspective. And it's a real value add to their clients. So we've had a huge amount of interest, as you can imagine. Broker dealers looking at it, OTC desks, market makers, big institutions that might potentially banking on only using one exchange. So yeah, it's incredibly fascinating. And the other thing is we're able to tailor the way that it works. If someone doesn't just want flat out bankruptcy or flat out liquidation, right, which is the trigger, we can do it to a cyber incident, or we could do it to a fraud incident, or a director a director fraud or an officer fraud incident that leads to a potential incident. So there's lots of ways to kind of structure it.
So first, congrats on the new product. We're definitely leaving the Wild Wild West. It's so great to see companies like yours help mature the space with these types of products that create sort of public trust and confidence in our industry. And I'm really excited that you guys are doing this, and excited to have you as a partner for this series. It's been really fun. I was just curious if you could elaborate on what specifically is covered by these policies a little bit further.
Yeah, so quite literally on Falter, right? We'll really simplify it. Falter, company exchange goes bankrupt, money pays out, right? Up to the limit of whatever the bankruptcy is, and it's the amount that is tied up that the company that's buying the insurance can't extract from the bankrupt exchange. So super simple like that. If I can't withdraw within 30 days due to an alleged bankruptcy of my partner exchange, I am claiming on this insurance product. And then we go through a variety of like subrogation, we'll take control of their assets and go through the whole bankruptcy process on their behalf. But the good thing is they have money, they can continue to operate. Because that was what was fascinating with some of these bankruptcies. It brought so many other companies down with it because their assets were tied up and they couldn't then, actually operate. That's just one of the myriad of insurance products that we offer. There's the directors and officers insurance, which is probably one of our, most purchased insurance products from clients. We've got over 1,000 crypto and Web3 clients in over 36 different jurisdictions around the world now. We've got technology, errors and omissions, or professional indemnity. That covers the actual tech side of it, if it's a tech offering, and provides, liability under contract. So let's say, Josh, your tech company A, I'm your user. Your tech goes wrong, I'm going to sue you because your tech failed and I've lost money. That's what that covers. We've got crime. We've got completely bespoke Web3 crypto crime product, which covers the theft and loss of digital assets. It's literally that simple, which realistically, I feel like everyone should be buying right? If it's a hack, a social engineering, employee infidelity, or something like that that leads to a theft of digital assets. Hedge funds are obviously purchasing this. Exchanges are purchasing this. Anyone who touches and holds crypto.
Yeah, I mean, look, my friend unfortunately got caught in one of the Coinbase exchange sort of fraud situations, and I think I get a text message from someone that someone is trying to get into my Coinbase account and to call a phone number about once a day, if I could be mistaken. So I mean, these things are prevalent, and we need products like this to help keep the pipes clear, right?
100%. And Josh, the reason they're targeting you is because everyone knows your balance is well of in excess of $100 million in crypto, right? That's why. But when you think of some of these big institutions that are obviously in crypto, some of them have huge assets under custody or assets under management. So why not try? And that's exactly what all of these kind of different products. It's the directors, the officers, the crime, the infrastructure, their professional service, the staking risk, the smart contract risk, and we try and provide every single kind of product we can to these innovative industries, and try and give them a big hug, right? And try and manage and mitigate all their risks through insurance.
That's
Yeah.
really helpful. I think something else I just want to bring up to kind of wrap this up is, so people are hearing this, and obviously exchanges are large, and like you have some dexes that have been around for a while, and they have plenty of volume that are going through. But you also have a lot of projects that are launching now, and they're getting their TVL up, they're getting more things up, or you have a broker that's getting off the ground. How soon should companies be thinking about protection like this? Like, how is it earlier on? Is it once you're established? Like, when in their process should they be thinking about when is a good time to like get these types of policies in place?
I mean, let's think of it like that, right? As your TVL starts to grow, or as you start to become operational, as you start to have any of that money in the door, or you hold any other person's money or digital assets, immediately. Because if those assets go, if those assets are taken, if your tech fails on your first client, you might very well be sued immediately. And if you've got no backstop like insurance, if you've got no risk management in place, well, the company's gone. And you've spent all that time trying to get something set up, and then all of a sudden kaput because you needed that lifeline which insurance really offers to help support and nurture the growth of your company, and you might not have it. And directors as well, if you've gone and done a fundraise, you might only be getting started, but something goes wrong with one of the products, it doesn't work, you don't have a license, all your investors could come after you for a variety of different reasons. So it has to be something that you take into consideration from grassroots, right? You have to think, as I am building, what are the risks associated with it? People might think, oh, the 10-ton gorilla might come in and compete with us. Oh, I might not get this license in this jurisdiction. That's all true. But insurance can often mitigate a lot of the problems you're actually thinking of. So yeah, it's a day dot thing that you should be taking into consideration as you start to grow and even start your company.
Sounds pretty good. I just hope one day you guys get into health insurance, because that industry needs a lot of fixing. In the meantime, that wraps up today's episode of Hot Topics, but stay tuned for an additional important announcement. Meanwhile, today we covered Bullish's entry into New York, Gemini closing the book on a tough chapter, and Relm raising the bar on crypto security. We're seeing real movement across policy, platforms, and protection. I'm Josh, here with Richard and our guest Christian Davies from Relm. Stay curious, keep pushing the boundaries, and don't forget to subscribe so you never miss what's next on the Edge of Show. Well, before we wrap today's episode, I want to take a moment to share something personal and meaningful with our community. This will actually be the final episode with my co-host and dear friend Richard Carthon, as he steps away from his role at the Edge of Company after 3 incredible years. Richard has been more than just a teammate. He's been a pillar of the show, our culture, and our growth across Web3. And he's been a friend. From the very beginning, Richard has brought great professionalism, warmth, hustle, charisma, and enthusiasm to the company. And that energy is sort of translated into great content. We probably have produced, gosh, at least 100+ shows together. He's been my brother in arms at the mic, helping to shape our conversations, our chemistry, our shared mission to bring clarity to the chaos in this incredibly fast moving space. He's closed partnerships at every edge of the globe, and we've traveled all around the world together. And he always shows up and keeps the ball moving forward. So, Richard, I know I speak for all of us at the Edge family when I say thank you. And I know I speak to all of our listeners that will miss you and your energy on the show. It's been great building this content together, evolving the company, and I know you're going to continue to be successful in whatever you do.
Yeah, Josh, I really appreciate those kind words, and it's been an awesome journey, man. 3 years is quite a while, over 100+ episodes, both virtual and IRL. Us putting on content together at events everywhere, but then also being able to like have these like cool little moments outside of just the content piece, and like building relationships, and being able to help others, and all of it. Even meeting some of the people who listen to this show, and they come and like give us feedback on how much they enjoy, what we've been able to do here. It's been a really great experience. For all those out there, I'm stepping away for more personal reasons than anything. Nothing against Edge of Show or anything like that. It's been nothing but a great experience. And I'm not going anywhere. I'll still be in the crypto space. I've been doing content for 7+ years at this point. I've personally probably done over 500 episodes, and just gotta take a quick break. So we'll see where things go from here. But again, above all, I really appreciate everyone who's listened to the show, tuned in to us, and enjoy the chemistry we've been able to build through the years, Josh. And wish nothing but success for you and the Edge Up show.
Cool. Richard, how can folks stay in touch with you and follow your adventures?
Yeah, if you want to go over to X and follow me, just my name, Richard Carthon. You can pretty much see all my links to everything else from there, and see a lot of what I got going on. So definitely appreciate all of you who've been tuning in and want to stay connected.
Well, thanks again, Richard. You've been part of the DNA of this organization and will be forever part of the story and where we go from here. So, for everyone listening, we're saying our final farewell to Richard as co-host. The mission of Hot Topics and the Edge of Show continues. We've got new guests, new ideas, new formats, new co-hosts coming soon, and Richard's presence will still be felt. I know for all of you at home.
All right, thank you, and sign off for the last time. Appreciate everybody.